You've probably heard the term IPO thrown around all the time, right? Especially when some huge new company is about to hit the stock market. But what does it actually mean? What's happening behind the scenes for that business? And more importantly, for you? Well, in this explainer, we're going to pull back that curtain and look at the entire process.
So, let's get real. When you see a company is about to IPO, is that your big signal to jump in and invest? I mean, it's super tempting to think so. We're going to break down exactly how this whole thing works, so you can really understand the opportunities and, the very real risks that come along for the ride.
All right, here's our game plan. First, we'll cover the absolute basics, what even is an IPO. Then we'll get into the why, the reasons companies do this in the first place. After that, we'll walk through the step-by-step process, weigh the good against the bad, and wrap it all up with 2 real-world stories that show you just how wild these things can be.
Okay, first things first. What in the world is an IPO? Because it's so much more than just a money thing. It's this massive, fundamental shift that takes a company from being a private club to a public playground.
So, IPO literally stands for Initial Public Offering. And it's exactly what it sounds like. It's the very first time a private company opens its doors and sells off pieces of itself, or shares, to the general public. Before the IPO, the company is owned by a handful of people. The founders, maybe some early employees and investors. But after the IPO, hey, anyone can own a slice of the pie, including you and me. Let's make this super simple. Imagine you start a killer small business, and it just explodes in popularity. Now you've got this dream of going global, but that takes a ton of cash, way more than you have. So what do? You decide to sell tiny little pieces of your beloved business to the public to raise all that money. That whole process, just on a gigantic scale, is an IPO. Which brings us to the next logical question. Why would a perfectly successful private company want to do this? I mean, it's a huge, complicated ordeal. Well, it turns out there are a few really powerful reasons driving them. So why go through all that hassle? It almost always boils down to one of 3 things. Number 1 is just rocket fuel for growth. We're talking a massive injection of cash to build new things, hire more people, or expand across the world. 2, it's about cleaning up the books and paying off any existing debt. And finally, number 3, it's payday for the people who believed in the company from day one. Those early investors can now sell their shares on the open market and hopefully make a nice profit.
So, how does this whole transformation actually happen? A company can't just wake up one morning, flip a switch, and suddenly be public. No way. It's a long, really tightly regulated journey with a bunch of key steps. Okay, this road to an IPO has 6 main stages. It all kicks off with the big internal decision to actually go public. Then, the company hires investment banks to be their guides. These are the underwriters, the experts who steer the whole ship. Step 3 is just a mountain of paperwork, with the most important one being the S-1 filing. That's a public document that spills all the details, the business, the financials, the risks, everything. After that, the bankers help set an initial price for the shares. Then comes the roadshow, where the executives basically go on a world tour, pitching their company to big-time investors to drum up excitement. And all of that builds up to the grand finale, IPO day, when the stock officially starts trading for everyone to buy and sell.
All right, let's switch gears for a second. We know why companies do it, we know how they do it, but let's talk about you, the individual investor. What does all this mean for you? Is jumping into an IPO a golden ticket or a really risky gamble?
Let's weigh the pros and cons. The biggest allure, the big pro, is the chance for that day one pop, where the stock price just soars and you get a quick win. And hey, you're getting in on the ground floor of what could be the next great company. But the cons? They are serious. All that hype can inflate the price way too high, setting it up for a crash. And then there's something called the lockup period. The early insiders, they can't sell their shares for a few months. When that period ends, a flood of selling can hit the market all at once and drive the price way, way down.
Now, theory is one thing. The real world? Oh, that's often a whole lot messier. To really get a feel for how unpredictable IPOs can be, let's look at a tale of 2 mega-famous companies and see how their big debuts actually played out.
Let's look at 2 huge ones. Remember Uber's IPO in 2019? The hype was through the roof, but the stock immediately dropped below its initial price, and a lot of early buyers got burned. Now contrast that with Facebook back in 2012. Its launch was a mess, a technical disaster, pretty much everyone called it a flop. But the investors who ignored that day one chaos and focused on the actual business, they were rewarded with absolutely massive returns over the long haul. And that tells you everything you need to know. Day one hype is just noise. The real signal is the long-term quality of the company.
And honestly, that right there is the single most important thing to take away from all of this. It is so easy to get swept up in the excitement of a big launch day, but the performance on day one, or even week one, is often totally random. The real story, the one that matters, unfolds over years, and it's always tied to how good the company actually is.
So I'll leave you with this question to chew on. If you strip away all the crazy headlines, all the speculation, all the day one hype, what's left? What are those fundamental qualities, the real, tangible signs of success that let a company not just survive, but actually thrive for decades? Because that's the real thing to look for.